Have you ever felt like the economy is just this big, complicated machine with a bunch of charts and numbers that don't make any sense? Yeah, you're not alone. So today, we're going to pop the hood because the economy isn't just about data, it's about your job, your wallet, and the world we're all trying to navigate.
This really comes to life with the story of economist Heather Boushey. For her, economics wasn't just theory. It got real, and it got personal when her dad, a tool and die maker, suddenly lost his job. In that moment, she saw firsthand how these giant, abstract economic forces could directly impact her own family.
And that's really the question for all of us, isn't it? Whether it's the cost of filling up your car, the interest rate on a loan, or the job opportunities in your field, these forces are at play all the time. So how does it all actually work?
Okay, to get our heads around this, let's start with the absolute basics. What even is economics?
All right, so that's the fancy textbook definition, but let's break it down. Think of it like this. As a society, we have a limited amount of stuff. Money, time, oil, you name it. But we have unlimited wants. Economics is really just the study of our choices. It's all about how we decide who gets what. So, to figure out that big who gets what puzzle, different societies have come up with different master plans or blueprints for how to run things. Let's take a look at the big ones. First up, we have free market capitalism. This idea, which owes a lot to thinkers like Adam Smith, is built on a simple premise: private ownership. You, me, and companies, we own the businesses, the property, the ideas, and the whole point is to operate them for profit. And this system stands on four basic rights, like legs of a table. You have the right to own property, the right to start a business and keep the profits, the right to compete with others, and the right to choose what you want to buy or sell. It's these freedoms that really fuel the engine of capitalism. So how does a system with no central planner decide something as basic as the price of a coffee? Well, it's basically a constant tug of war. On one side, you have supply, the sellers. The higher the price, the more coffee they're willing to sell. On the other side, you have demand. That's us, the buyers. The lower the price, the more coffee we're willing to buy. So, who wins? Well, neither. The market finds a natural sweet spot. Right where those two lines cross is what's called the equilibrium point. It's the perfect price where sellers are making exactly the amount of coffee that buyers want to drink. It just works itself out. That's the invisible hand you hear about. But capitalism isn't the only blueprint out there. You also have socialism. Here, the government steps in and owns and operates the really essential industries. We're talking things like utilities, transportation, sometimes healthcare. The goal isn't so much about individual profit as it is about social equality. But there's a trade-off. This often means higher taxes, which can sometimes lead to what they call a brain drain, where highly paid professionals might move to countries with lower taxes. Now, in reality, almost no country is 100% one or the other. Most countries, including the US, are actually what we call mixed economies. They're trying to get the best of both worlds, the innovation and drive of capitalism with the social safety nets and public services you see in socialism. It's all about finding that balance. Okay, so you've picked your economic blueprint. How do you know if it's actually working? Well, just like in a car, you need a dashboard, a set of gauges to tell you how healthy the economy is. And the three main gauges you're always hearing about are GDP, the unemployment rate, and inflation. Think of them as your economy's speedometer, its check engine light, and its temperature gauge. Let's start with the big one, GDP. This is basically the total price tag on everything a country produces in a single year. Every car built, every app developed, every pizza delivered. If GDP is rising, the economy is growing. If it starts to fall, that could be a sign of a recession. Next up is the check engine light, unemployment. But it's a little more complicated than just one number, because not all unemployment is the same. There's frictional, for people who are just between jobs. There's structural, when jobs exist, but people don't have the right skills for them. Seasonal is obvious, like a lifeguard in winter. The one that really gets economists worried is cyclical unemployment. That's when people are losing jobs because the whole economy is shrinking. And finally, the temperature gauge, inflation. To put it simply, inflation is when your money just doesn't go as far as it used to. It's that feeling when a dollar today buys less than it did a year ago. A little bit of inflation is actually considered healthy for an economy, but when it gets too high, it can cause some serious problems. So what happens when those dashboard lights start blinking red? Unemployment is high, inflation is out of control. Well, that's when governments and central banks reach for their toolkit to try and get things back on track. But before they even open that toolkit, there's this massive factor they have to deal with, the U.S. national debt. At over $32 trillion, this is the total amount of money the government has borrowed over the years. And that number creates some serious constraints on what they can do next. I mean, just look at this chart. You can see how dramatically that debt has shot up, especially in the last few decades. So for anyone trying to manage the economy, they're not just steering the ship, they're steering a ship that's also carrying this enormous financial weight. So keeping that in mind, there are two main toolkits. First, you have fiscal policy. This is what the government controls, Congress and the president. Their tools are taxes and government spending. Then you have monetary policy. This is handled by the central bank. For the US, that's the Federal Reserve. Their big tool is controlling interest rates, which makes it either cheaper or more expensive for everyone to borrow money. Whew, okay, that was a lot. So after all that, where are we? Let's just do a quick recap of the journey we've been on.
We started with the why, seeing that economics isn't abstract, it's deeply personal. Then we looked at the blueprints, like capitalism and socialism. We learned how to read the dashboard, using those key indicators like GDP and inflation. And finally, we peeked inside the government's toolkit with fiscal and monetary policy.
And all of that brings us to the big question looking forward. All these systems and tools were designed for an economy based on human work. But as artificial intelligence gets more and more powerful, it's changing the very definition of productivity. So which parts of this whole system, our blueprints, our dashboards, our tools, are going to work in the future? And which parts will we have to completely rethink? That's the challenge for all of us.